Let's take a look at the stock market for this past week as we look at the 60-minute chart of the S&P 500. You can see in here, look at those that little up channel that we have put in there. It's pretty clear that the market has been churning its way up all week long. There was some news overnight that got the markets weak in here on Monday. You can see that. Merkle wins with a weaker showing. Apple tells their suppliers to slow down deliveries. That was weighing on the Nasdaq. Target says they're going to raise wages to compete with Walmart and cease $15 minimums by 2020. So that's wage inflation potentially showing up. Dudley sees inflation restraints lifting from the Fed and talks about more hikes. And North Korea, Kim, says that the U.S. has declared war and now can shoot down the U.S. planes. So that had the market weak early on Monday. You can see that, but buyers came in, as seemingly happens every day. The tax plan was released here on Tuesday, and the markets liked it for a few minutes, but then started to sell off, but buyers came in again. Yellen spoke that day, talked about inflation and policy, and she says she's been wrong on inflation. Inflation is low and could slow down the pace of hikes. And then she turned around and said to be wary of raising too slowly, even with low inflation. So I got a lot of question marks when I hear that, because it's total confusion. And there is talk now about whether or not Yellen is going to be reappointed. And you know me, I certainly hope she is not reappointed, because this Keynesian stuff is eventually going to get to kill the economy again, like it's done time and again. So we need academics out of there, and we need some people that really understand the true economics and business to be in there. So we'll see who we can get. I want Yellen out. Tax plan is at this point leaked again before the speech actually comes. Bonds crack 1.5%. Talk in a moment about why that happened, and the dollar jumps. So the Russell 2000 at this point, buyers start to come in, and it explodes for 2% on the day, and it lifts all stocks. President Trump talks here in the afternoon about his tax plan. Here you get on Thursday, GDP revised a little bit stronger to up 3.1. Bonds are dropping again. Bonds had a pretty tough week. Fed Fisher comes out and he says it's important to reverse massive bond buying program. That got a little dip in the market there, but you could see what we had was a rally Monday, Tuesday, Wednesday, Thursday, and Friday. Here we are. No real news for the day out there. The president spoke again defending his tax plan, but buyers are in here, and even though the Russell is stalling, if anything, this is a market that is extraordinarily strong, and you can see that as buyers just seem to come in constantly. So that's a look at what happened in this last week. So the stock market, as I said, has been choppy, and choppy on the upside as it has a dip, and the buyers come in, and seemingly there is no real selling out there, and buyers in the third tier of the market as they're buying these low cap stocks. We said for the stock market last week that it was likely to be choppy with a downward bias. That was not right. The downward bias only was early in the week. It missed our target on the downside in the S&P 5, only 4 points, and then turned up. We were suspicious of that kind of a pattern, but it got up higher certainly than we expected that it would right in here. So here is the pattern that we're looking at. There are several cyclical patterns that we're looking at. What's really interesting right in here is that there's some synchronicity of patterns coming in right in here. In other words, all of these lows, that points to right over here. That makes the odds very high that we're going to have a down week coming up right in here. A down week is our projection. Now, our target for last week was 24.83. This was 24.87 on Monday morning. That was all we got. So it was this pattern in here, and then the next rally. So that's this right in here and the next rally. The pattern was correct. The depth of the decline and the amount of the rally was not. So we've moved up now to close to this 61.8% fib extension. And that is a spot where we're likely to run into some trouble right there. So we're going to look for a decline this week. And our projection is to this area down right over here, 24.94 to about 24.87, into that short-term support. There's a little minor support over here, but I have some doubts that that's going to be meaningful. So we're going to look for a down week into that area, and that looks like about 3 to 5 days. So if we get some sharp declines early in the week, then it's probably going to pick its head up again, as we probably can get a only about 4 days based on this counting here to the downside. So this looks like a down week in the S&P 500 as we look at that. Take a look here at this, the combination of what I think is the greatest combination of short-term indicators you can have, and that is the slim ribbon and the momentum index right here paired with the projection oscillator, and you've got an overbought situation that's pretty significant in there that calls for a pullback only. It doesn't say anything really that negative. When I look here at the Nasdaq and the X, you'll see in here that there is similar pattern as that we're looking for a down week in here to follow these patterns, as this minor cycle seems to be lining up pretty nicely with that bigger cycle. So we're looking for a decline in the Nasdaq for this week. Take a look at the momentum in here, and you can see that it's only neutral. So the Nasdaq, which gave up its positive momentum, has not restored positive momentum yet, and it's gotten overbought on the projection oscillator. That says to us that it's likely that the Nasdaq, which spurted pretty well today, is going to give ground and have a down week also in the Nasdaq. Take a look at the Russell in here. So here's the Russell. You could see, man, did it explode. You could see it certainly moved up. This is the furthest price-wise it's been from the 13-day moving average in all of this 6 months. That shows some extreme overbought situation. And if you look right over here at our option bias indicator, it is saying extreme overbought condition right there. That says likely to turn down. The cycles in here a little different. In other words, it's calling for some 3 days on the downside and then move back up. So we're going to look for that kind of a choppy week. I wouldn't be surprised to see a 20-point down day in the Russell this coming week, and then find the buyers coming right back in. We would probably project the Russell down to about 1470 or lower in here. This price here is 1455, so it's 1470 or 1455 on the downside in that area, and then likely getting a bounce again. Extreme overbought condition in the Russell as the buyers came in there in a massive way because they are just anxious to own those cheap stocks they think have been left behind. So that is it. That is our show for the week. A very significantly overbought situation in the stock market that should bring some declines, and overall lots of, I think, valuable information for you. I have a special going on right now. If you would like to get all of our videos, you can get those for half price. If you want our rankings and setups, the same thing. Or if you want our charts on your TOS platform, just send me an email to slim@askSlim.com. Ask me for that special link, and I will send you that link, and you will be able to see all of this amazing work for just a crazy low price. So in fact, you could watch all 250 of our videos, learn a ton for a whole $16.50. How can you not do that? I hope you enjoyed that video. Be sure to subscribe to our YouTube channel, and also go to askSlim.com and become a level 1 member. No cost to you, and we have some special videos for you to see. I know you'll enjoy them.